Want to know the secret to becoming a successful investor? What if I told you there's a book written over 70 years ago that's still considered the Bible of investing, a book that Warren Buffett himself calls the best book on investing ever written? Well, that book is The Intelligent Investor by Benjamin Graham. And in this video, I'm going to break down the 5 most powerful lessons from this book that can change the way you think about money forever. We're talking about timeless principles that have helped countless people build real, lasting wealth, not just chasing the latest fads in the market. Stick around because by the end of this video, you'll have the tools to start investing like a pro. First, let's talk about what this book is all about. Now, The Intelligent Investor isn't your typical get-rich-quick guide. Nope, this book is different. It's a deep dive into the mindset and strategies of smart, long-term investing. We're talking about building wealth slowly, steadily, and most importantly, safely. This book is about ignoring the noise of the market and focusing on what truly matters. Benjamin Graham, known as the father of value investing, teaches you how to think like an investor, not a gambler. He focuses on minimizing risk, avoiding emotional decisions because we all know how those can turn out, and finding real value in the market. Sounds simple, right? But trust me, the lessons in this book are game changers. They've changed the way I invest, and they can change your life too. So let's dive into the first lesson. Lesson number 1. Investing is not speculating. Graham makes it crystal clear that there's a huge difference between the two. Speculating is like gambling. You're betting on short-term price movements, hoping to get lucky, hoping to time the market perfectly. But let's be real, trying to time the market is like trying to catch lightning in a bottle. It's incredibly difficult, and most people get burned. Investing, on the other hand, is about taking a long-term perspective. It's about carefully analyzing a company's fundamentals, their earnings, their assets, their management team, and buying stocks that are undervalued. We're talking about finding those hidden gems that the market has overlooked. Graham says the intelligent investor is a realist who sells to optimists and buys from pessimists. And that's what separates the amateurs from the pros. Stick around because I'll show you exactly how to spot those opportunities. We'll dive into the nitty-gritty of analyzing companies, understanding their financials, and making sure you're getting a great deal. Lesson number 2. Meet Mr. Market. Now, this isn't some Wall Street hotshot in a fancy suit. Graham introduces this concept to explain how the stock market behaves. Mr. Market is like your moody neighbor. Some days he's overly optimistic, and other days he's ridiculously pessimistic. He's always trying to buy your stocks for less than they're worth or sell you stocks that are overpriced. But here's the key. You don't have to listen to him. You don't have to let his emotions dictate your investment decisions. Instead of reacting to market swings, the intelligent investor stays calm and takes advantage of Mr. Market's mood swings. When everyone's panicking and selling their stocks for pennies on the dollar, that's your chance to swoop in and buy those undervalued assets. Want to know how? Keep watching. I'm going to reveal the strategies that Graham used to build his fortune, and they're still just as relevant today. Chapter 4. The Margin of Safety, Your Financial Safety Net. Lesson number 3. The Margin of Safety. This is arguably the most important concept in the book. This is what separates the gamblers from the investors. Graham says you should never buy a stock unless it's trading at a significant discount to its intrinsic value. That discount is your safety net. It protects you from losses if things don't go as planned. Think of it like buying a $100 bill for $50. Sounds like a no-brainer, right? But in the stock market, people do this all the time. They get caught up in the hype and forget about the fundamentals. But how do you calculate intrinsic value? How do you know if a stock is truly undervalued? Don't worry, I'll break it down for you in just a minute. We'll go over some simple metrics you can use to get a rough estimate of a company's worth. And once you have that knowledge, you'll be way ahead of the game. Chapter 5. Be greedy when others are fearful, and vice versa. Lesson number 4. Be fearful when others are greedy, and greedy when others are fearful. This is one of Warren Buffett's favorite quotes, and it comes straight from Graham. When everyone's rushing to buy stocks because prices are soaring, that's when you should be cautious. That's when you should be asking yourself, is this too good to be true? But when the market crashes and everyone's panicking, selling their stocks for anything they can get, that's your chance to buy high-quality stocks at a discount. Remember Mr. Market? He's an emotional wreck. And when everyone else is losing their heads, that's when you need to keep yours. It's all about thinking long-term and not following the crowd. It's about being a contrarian, going against the grain and having the courage to buy when everyone else is selling. Chapter 6, The Defensive Investor, a Strategy for Everyone. Lesson number 5, The Defensive Investor. Graham says most people should follow a simple, low-risk strategy. That means investing in index funds, high-quality bonds, and a diversified portfolio. Why? Because most of us don't have the time or expertise to analyze individual stocks, and that's okay. Graham's goal is to help you build wealth safely and consistently over time. No crazy risks, no sleepless nights, just steady, intelligent investing. Now, if you're willing to put in the time and effort, you can definitely learn to pick individual stocks like Graham did. But for most people, a simple, diversified approach is the best way to go. And the beauty of index funds is that they're incredibly low cost and easy to manage. So, are you ready to start investing like an intelligent investor? If you're serious about building long-term wealth, this book is a must-read. I'll leave a link to it in the description below. And if you found this video helpful, don't forget to like, subscribe, and hit the bell icon so you don't miss out on more tips like these. Let me know in the comments. What's your biggest challenge when it comes to investing? I'd love to hear from you. Thanks for watching. And hey, if you're curious about how to calculate a company's intrinsic value, stay tuned for my next video where I'll break it down step by step. Until then, keep investing wisely. And remember, the stock market is a tool for building wealth, not a casino. See you in the next one.